special focus on equity access, your daily perspective on stock market developments and on developments in the Zimbabwean economy. A beautiful evening it is to you. I'm Ibn Mabunda. Let's get started. Our stories tonight: Amalgamated Regional Trading today held an annual general meeting in the capital with the chief executive optimistic of reaching a $50 million target in as far as revenue is concerned. Meanwhile, AIM listed Premier African Minerals Limited said it will commence drilling at its wholly owned Zulu Lithium and Tantalum project in Zimbabwe. Plus, Zupco to introduce technology in its operations with a beef up of its buses. For conversation on these and other issues, I'm joined in studio by our resident investment analyst, Anesu Chimbumo. Anesu, good evening and welcome to the show.
Hi, Ibn. How are you doing yourself today?
Magnificent. Let's get the ball rolling.
Yes.
Amalgamated Regional Trading says that they expect to reach a target of $50 million in as far as their revenue is concerned. Well, I had a conversation with the Chief Executive Officer. Let's have a listen. In the trade update, you remained optimistic that you'll be able to hit a $50 million target for your revenue.
For the year?
Correct.
Yes.
Why the optimism?
Look, you know what? We're looking at the recent monetary policy pronouncements,
Okay.
and believing that barring any other huge changes, it should steady the ship.
Let's talk about your debt exposure. How much of it is foreign? How much of it is local?
I think at the moment we're just looking at 40%.
40% foreign.
Foreign.
Okay. So with the monetary policy statement as well as the forex situation, what can we expect in terms of the debt? Are you in a comfortable position? Does that leave you in a comfortable space? Or
Comfortable, no.
Okay.
But we believe that we'll be able to weather the storm.
Are you expecting government to ring fence corporates in that regard?
We're expecting that the intermarket bank rate system will operate efficiently, and access on a prioritized basis will be given fairly to applicants. That's what we expect. We're still aggressive in the markets. We're still looking at growing our footprint in Mozambique and Botswana. And what has happened is that we've actually started trading both our writing instruments, which is Eversharp, and batteries.
All right. And with regards to retention, how much is government allowing you to actually?
It's now on 80%, so the government is taking 20% of the forex, which ordinarily obviously should impact our already strained resources. But like I indicated earlier on, if the interbank rate is operating efficiently, I think we should be able to make up for the 20% on the market.
But in terms of the effect on your balance sheet with the relaxation of the exchange rate, what are you expecting in terms of that?
Well, I think that impact is going to be across businesses generally, because it's all along. I think obviously our balance sheets we're on the basis that this was a dollar, isn't it? Yes. And so the impact is obvious.
Okay.
Well, even I don't think they're very optimistic. I think it's well founded for them to expect a $50 million revenue by the year end. Of course, last year in the 4 year up to 2018, when by the way their 4 year ends in September, they did manage to reach about $46.9 million worth of revenue, which was about 40% ahead of the previous year. Now 50 million to them is just about 9%, a little bit under 9% increment in terms of their revenues. Yes, in their trading update today, they did mention that they had a volumes growth sales volume actually declined by about 20%. But as I was just having a small discussion with Abisai, he mentioned that there was an issue much to do with the disruptions in terms of sales during the times of stairways, where it took about a whole week of sales for them without much being done, and then also prior to the January shutdown, there were a little bit of disturbances in the previous year, close to the end of it. Those disturbances were most of his worries in terms of the decline in their sales volume.
Yeah, because the sales volumes did actually decline by 20%.
Yes. So that 20% was much to do with that worry, and then also there has been some inflationary effect that has caused for people to somewhat retract from actually spending as much as they used to in terms of some of these some of the goods that they actually do provide. So for them, I don't think they would be very much worried about the 20% decline for the first 4 or 5 months that they've traded currently. But then by the time that they hit the second half of their financial year, considering that economic distress is a little bit has a little bit lessened, and also they're in a fairer position, they should still expect somewhat of a fair growth in terms of their revenues. I mean, we do also have to factor in the inflation that I've just mentioned had a negative effect on the consumer, but then it's a positive thing for them because their sales did somewhat come up a little bit, even though there was a sales.
Of note as well would be the fact that their export revenues also went up by about 10%. And in my conversation, of course, with the chief executive, he did highlight that they are receiving up to 80% in terms of forex retention. Across the board, there are complaints from different players in different industries who are advocating for an increase in terms of the forex retention, to cite, of course, the mining when there is a 50 as well as a 55% retention, and miners advocating for that to be moved up to 80%. But these guys are more in a comfortable position. They've got an 80% retention, and they've got an international exposure in terms of Malawi as well as is that Zambia. So I think that also puts them in a better space in terms of they're being able to get foreign currency in that regard.
Well, yes. I mean, if I were them, I wouldn't really cry foul about the 80% forex retention rate that they do have, even though it is not what they would really want. Because as I was talking to the chief financial officer, who was the episode that I mentioned earlier on, he actually did mention that they have cited some forex challenges that then somewhat brings back into that pushes them to actually pull back on their production rates, because I mean, in terms of the battery section, these guys would need some imports for them to have a complete unit of a battery for them to actually end up selling locally or exporting. I mean, their tissue business as well, they do also aim to provide premium quality tissues, and premium quality tissues are not going to only be able to actually be manufactured based on only local raw materials. Now, they did also mention that the raw materials expenses actually went up a little bit, which has somewhat reduced their gross margins in their full year for 2018. I do expect that to keep on having that kind of a knock on their numbers. I mean, going forward, we may have now a relaxed foreign exchange rate, but as things are on the ground, we are not very sure how stable that market is going to be, that foreign currency market is going to be. So if things then go haywire, we may expect that raw material cost also bumping up again. So that would still then affect their gross margins. They also did mention that their gross margins for the comparable period that they were giving us a trading update on also did come off to about 40%, if I'm not mistaken. Yeah. Yes. So we do see that the forex challenge has still an effect on their gross margins, which is pretty much a concern for them, because it shows how well their business is performing in terms of their sales versus how they're coming up with those.
So perhaps we could expect a positive performance in the year 2019.
Yes, I wouldn't take it away from them that they're in a good space, because I mean, the export market that you mentioned, they only really started getting into those markets in the previous year, where they had to deal with a lot of penetration pricing, which kept their revenues actually very much humble at the $46.9 million mark. Because these guys were getting into the market, they needed to come in with very competitive pricings and for their product to get known. Now, I suppose that as they're getting into the second year within that market, they would be upping their prices a little bit more for them to be for them to actually rake in a little bit more, which then makes the $50 million mark a little bit less unreachable, if I'm to say.
Okay, moving on to our next story. AMI listed Premier African Minerals says that they are commencing drilling at their wholly owned Zulu Lithium as well as Tantalum project in Zimbabwe. Well, background is it's actually a $400,000 project which they were able to finance through the issuance of shares in that sense. Now, in September, they had to put aside that operation because of unresolved issues. But now they're back. It seems as though those issues have been addressed and the project is actually moving forward. How relevant is this engagement to this London-listed company, considering the fact that their investments are heavily in Zimbabwe with very little perhaps exposure outside Zim?
Okay, just to shed a little bit more light around the investments that they're going to be actually getting. They also have a heads of agreement that they're going to be getting into a deal with Cadence private limited company, which is another minerals company, which seem to be very heavily invested in lithium mining projects, which is what they're going to be dealing with here in Zimbabwe at the Zulu mining project. That is about almost close to Bulawayo, I think about 20 km out of Bulawayo. So the relevance in this is that Cadence has pretty much put up about $5.1 million for this project. 400,000 being a part. 400,000, which is going to come from the ordinary shares, is a part of the financing of that project. But then there was mention by Cadence that there is a likelihood of getting about $17 million post the investment that they're going to make within Premier African Minerals. So for such a heavily invested company within the lithium resource, they do see a lot of value that is going to be coming out of that. I mean, they did see they did find a net present value of about 123 million, if I'm not mistaken, in terms of lithium concentrate, and then about $728 million on a net present value again in terms of lithium carbonate. Now, this study was done around about November last year. Yes, in September, the Premier Africa did decide to actually hold off on the deal. I think those details are a little bit more privy to them. I don't have much detail as to why they really pulled out. But then I think there has to be some kind of hint in terms of them actually having to try and wait and see how the economy was going to be driven. Especially, we were still waiting on an incumbent, the finance minister, who had promised some meaningful things to the country prior to him being actually appointed as the finance minister. Now, these guys waited to see what was happening, which is one of my assumptions of them actually holding off on the deal. And then now that they've seen the direction of the country has some sort of direction that they would still put their money in Zimbabwe and still benefit.
Are you saying that now we are on a positive path?
I'm not saying that we're on a positive path, but then I'm saying that these guys held off just to see how the economy was going to be handled. And now that they've seen that there's a direction that we're taking. It's not a positive. It's not a stagnant direction. It's a direction. I'm not going to give a direction that they've seen, and they still. That. I mean, definitely we are in a negative. We are pretty much in a negative direction right now. We're going backwards. It's no secret to any person in the country. There's not much economic improvement.
You've got clarity to it.
Yes.
In terms of your side. Okay.
Yes. So these guys have have pretty much said, you know what, despite all of the economic woes in the country, we could still put our money there. I mean, the mineral is currently trading at about $118. It did come off today on the previous day, but then the product has, the mineral has a growing market. These guys do expect a lot of growth within that mineral space. There's a lot of supply shortage that is in that space. There are a lot of usages that mineral can be used. I mean,
what are those?
I mean, you can talk about batteries. Electrical vehicles are coming into space. Batteries use some lithium. So I mean, with that lithium mineral, which is pretty much a little bit marginalized right now, factoring in the issue to do with the supply shortage right now, it seems as if it's marginalized and it could grow beyond $118. Which is their current price as of the 26th of February. There is a lot of potential in them actually gaining a lot of value out of that. So going forward, I mean, they're going to have to get into deeper into the study of that area and then find out how much more they can actually get out of the prospective area that they're going to be mining in.
Okay. National Transporter ZUPCO is taking a leap into the technological sphere. Of course, we have fuel crisis in the country, transport issues with regards to workers accessing metropolitan areas.
Yes.
And I've noticed the fact that ZUPCO is launching into a new app that they've called Necessity, which tracks buses, checks bus fuel levels, as well as also has an electronic payment system.
Okay.
How important do you think that would be to their operations?
It'll be very important because I mean we could track accountability. We could find out how much they're actually using. It could better their management style. They could find out better routes. The list of good uses of technology do come into play. I mean, they would be getting influxes of income. Which are far much larger than getting the trickles of income that they've been currently getting. And I mean by the paying on demand type of system that they've been using. Now, an electronic system would require. I wouldn't want to always be putting $1 into my card every day. It would be very much costly.
So it brings with it convenience.
Yes. Yes, I mean, especially with the 2% IMT tax, I would rather just put in a chunk full of money that will spend me the whole month. So that means their revenues, I mean, it gives them a better sense of planning if they have larger amounts of money coming in at one go rather than the trickles that do come in. So the erraticness in terms of their revenue inflows would then be much more stabilized. They'll have better planning options as to how much fuel they need to budget for, and check on which buses need to actually be serviced for them to have a more efficient usage of fuel. I mean, technology is technology. It does make our lives better.
Talking about technology and the level of innovation in our country.
Yes.
Considering the fact that this Necessity app has been developed by local developers, how efficient do you think the system will be, and also how competent do you think these guys are, as well as how competent do you think our local developers are to...
I mean, we've had very good applications and programs that have been launched from the local base. I mean, you look at your EcoCash, your EcoLedger. I mean, if you have those kind of techies, programmers in the space making such applications and coming up with such brilliant, innovative ideas for the nation, I mean, we wouldn't be going any further from closer to being a better nation, because these guys have shown some proof in terms of what they've provided in the country already. I'm not very sure as to who exactly developed these programs, but then we have pretty much competent tech gurus in the country. A lot of guys are around the country.
RTG,
you see, so efficiency in technology is being pretty much tapped into, and it is creating a lot of jobs for these tech guys. I mean, in the country, we don't have a huge appreciation and usage of the later day advanced technology that is being used outside of Zimbabwe and in other countries international. So you'd find that if we keep on making more room and making more space for these technology guys in the country, it would really breed them to actually keep on coming up with more innovative ideas, more innovative applications and the like, because there are a lot of companies that are really looking to go on a technical drive on the, I mean, you look at banks are really looking to making their own applications. I mean,
yes, for their own application. But of note, Anesu, if you check across Africa, there is that techno drive.
Yes.
You look at Kenya,
we do need to catch up in terms
you look
of
at South
technology.
Africa.
Yes.
I mean, there is that push, that aggression in terms of ramping things up in terms of technology.
And it seems to be
and
the
it seems
most
as though
simpler
Zimbabwe
thing
is
to catch
more
up with.
laggard
Yes.
in that regard. Our economy is still very much agro-mining based, but
Yes.
other countries run that they mean business.
Yeah, of course they do. I mean, they're doing very well
So
these days.
I think we need to stick to this path and see to it that we come up with our own solutions, come up with our own systems that actually simplify things for us.
Yeah, and I suppose technology isn't very hard for a country to really catch up. I mean, most of these tech guys are pretty much doing most of their studying over the internet. I would like to assume that I know a couple of tech guys who haven't really had the in class set up where they actually go into
programming, but
but then these guys are going on YouTube. I mean, well, most of the guys in the world do that, but then they're taking the opportunity by the horns, the bull by the horns, and actually tackling it and making sure that they soak up in as much information and the ability to actually manipulate these machines. Yes, it's a sad story for human resources, but hey, it's an efficient thing for.
And so we could go on and talking about the need for innovation in Zimbabwe. But
Yes.
let's come back to the fuel situation as well as the ZUPCO. Well, the minister yesterday said that they have increased their buses from 93 to 145. And to this point, 164 buses have been deployed in Harare. That's what he actually said. So with that, also we've got 200 buses that are expected to touch base perhaps in the few weeks to come. Do you think that would have a positive impact in as far as the employee base actually reaching workplaces from their residential areas, so to say?
Well, I think it's a negative and a positive that they're increasing their fleet. They do get to push out some of the private sector buses that are in the space currently that have been helping out ZUPCO in terms of transportation, but without much knowledge as to do with whether they're going to be pushing out these private sector guys. Giving a much more reasonable assumption, which any other sane business would actually take, is to push out the extra cost, which is those private sector buses. So if they push those guys out, that means the cost to do with paying those guys as to their services would actually drastically change their income balance. Now, when we then talk about an increased fleet, that means there are more buses that they're going to be that are going to be using the pretty much marginalized fuel that they're going to be getting. And already we are having a fuel crisis in the country. Queues seem to be getting longer by the day. They had come off a little bit, but then there were still queues. The queues are now resurfacing to be much longer than they used to be in the last couple of weeks. So it now begs me to ask them whether they are very much prepared to actually have such a system where they have such a huge fleet of buses that are in the country and be serviced at very marginalized prices of fuel. So with them being served such a marginalized price of fuel, that means a lot of quantity of fuel is going to be used, and that then suffers the private driver. I mean, we may talk about them actually being able to push out the private sector commuter omnibuses out of the way, but then I suppose the commuter omnibuses have an advantage as to how they can actually weave through some of these suburbs and all of that. But then that's besides the point. We could really look at the cost effectiveness of having a large fleet at a marginalized price. I would put it to the government that they need to reconsider the pricing that these buses are going to be getting their fuel at. It may not be the market price, but then it has to be a better pricing, because at that rate we will be making a perennial loss in terms of the fuel that we do import for the use of public transport.
Okay, and so on to the stock markets. How did the markets perform today?
It was a Black Bath day. As you can see, it's pretty much red on the board. All share index came off 1.75%. Industrials also came off 1.68%. Mining's whooping 4%. Yes. BNC is the cause as usual. These guys are the weight here of the index. Top 10 index did come off 1.81%, resultant to a huge 15% drop in Old Mutual's share price to about 750.3 cents. Padenga also did come off 8.26% for it to settle 100 cents. So if we just look at our rises and fallers, we had about 2 rises and about 8 fallers trading today. Of 21 counters, the remainder being stable. The 2 rises of the day were Masimba, who added 1.18%. These guys are pretty much into construction. Dairyboard also added about 0.5% for it to settle at 15.68 cents. Now, Old Mutual, which was the weakest performer of the day, I did mention that those guys came off 15.26. Bendura dropped about 14.37, which is the reflection of that 4.43% drop that the mining's index did have. Well, the rest are pretty much the following 2 are top 10 stocks. Axia dropped about 6.98% for it to settle at 40 cents. That will really bring me to ask the question. Probably, I think these guys had come to a place where they are now selling off some of their profits that they've made from Axia's recent fortunes that they had gained from. Now, if we just look at our 5-day trend, all share index is down 1.92%. As you can see, the graphs are showing that sharp decline of the day, and mining's index coming off to 4.93%, which actually makes them the only index of the 4 indices, which is now 9.13% behind its year opening level. Now, we do see that the rest of the indices seem to be following suit. They are very close to coming to a negative position in the year-to-date levels. I suppose there's still much to do with the foreign investors still really trying to see how they could play a hand in terms of the foreign currency market going forward.
As well as, of course, the forex retention scenario that we have had miners continue to clamor for to actually be adjusted. Well, thank you, Anesu. But just before we go, there's news circulating in, especially on social media, Twitter particularly, that there is a documentation from the Botswana government that says, contrary to what Zimbabwean government had published, that we were in line to receiving a credit facility worth about $600 million from Botswana. Botswana seems to say, not quite. So the question is government taking us for a ride, or what exactly is taking place? I'm sure tomorrow we should be finished with more accurate details with regards to the story. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From Anis and I, Danki and Asante Sana.